Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah.
Hi, and welcome back to The Conscious Day Trader. I am Yanis, and today we're going to break another ICT 2022 mentorship trade. As we always do, I show you my progress from the 1st of January. We've had all green days, including today's trade, which was yesterday, and today, which we had a very good day. We had a $507 trading the pound dollar and a bit of a loss on the US 30, but we're going to discuss that in tomorrow's trade. Today, we're going to break down, if we jump onto our MT5, start with the results. Here we are onto our funded account. So it's currently sitting at 185. Obviously, I haven't taken all the profits out. I've only taken out 5,000 profit from all, just because I paid that for the month. And then this month, we're going to see how we close. And then we're going to I try and take maybe half or a bit more than half than the month's profits, so the account can build as well. This is the 100K bootcamp that has now passed the milestones, and I'm at 175,000. And in the next upgrade or milestone, I'll be getting a 200,000. And that would be quite a significant milestone for me, especially if you think of how many challenges we had to pass to get here, and now we've created a nice buffer. It's a really good feeling to have an account that can breathe and you can manage, and you don't have to stress that you're going to blow out. So this is the account, and then we're going to go on to the history. That's today's trade that we're going to analyze tomorrow. Really nice here, fair value gap filled on the pound dollar to the pip there, but that's for tomorrow. And what we're going to do is jump on to yesterday's trade, which was Wednesday, and we made really good as well. Again, just short of $500, 494.50. As we can see, we had two trades on the Aussie dollar. And the reason I did this, if you watch the Aussie dollar trade, I was talking about the price retracing back to the 61.8 Fibonacci retracement. So when I opened the charts in the morning on Wednesday, that price held really nicely. So I traded the Aussie dollar. I didn't trade it as I would normally trade it for the whole $500, but it gave me $80. So really nice. I'd only had to make that amount again in the London session to be paid for the day. So that was a really nice fill in the morning. I was buying. I was also buying the pound dollar in the afternoon. So what I'm going to do now, I'm going to take, like I normally do, take the best price of these, plot them on the graph, and we're going to see, what did I see? Why did I enter? How did I break the daily bias? How did I manage my trade in my own style that you're quite familiar with now? Let's stick with the boring repositioning, because people, I got a message thinking, isn't that a martingale system? No, it's not a martingale system. Isn't this risking too much? No, it's not risking too much for my trading. And you get confused when you see a lot of trades on my day, just because even now we're getting it shorter and smaller and smaller. 5 trades on this today. I think it was like 6 trades. So we're getting closer to where I want it to be. And what I mean by that is, by repositioning, is I run my trades on 2 to 3 positions, and those 3 positions I can juggle around depending on what the conditions of the market and the price. If it's hitting an area where there's going to be a reaction for a better price, then I can go in with my 3rd position and reposition my 2nd. And I do that multiple times until I get to a price where I'm happy to let it run. So I understand there's questions around this, but I'm not sharing every single bit of that. Maybe one day I will. But it's something that I keep personal. I only keep that. Everything else I'm giving to you guys. And even this, I actually share it in detail. So if you go into the videos, you can actually break down what I'm doing. But I'm not going to write it down specifically on what time I reposition and how I reposition. But as a general philosophy around it, I reposition around areas of interest. So areas of interest with ICT, what are they? They're liquidity draws, they're equilibrium, previous daily highs, previous daily lows. If we're in discount, we want to be buying. If we're in premium, we want to be selling. These are areas. Also, I use Fibonacci retracements, 50%, 61%, the 76% as well. These are areas where I will make decisions on either repositioning my trades or adding into trades or taking out, reducing risk on a trade. And that's how I manage my trades. Right, that's being said, let's jump on to our favorite trading view, and we're going to start with the Aussie dollar. We're going to see why did I make £270 dollars? How did I make that? And then we're going to jump on to the pound dollar. And for today, we're not going to go into the index, just to keep this video quite short, as short as it can be. This is going to be quite detailed, so you're going to get a lot of knowledge from this. So grab a coffee wherever you are in the world, or beer if you're in Australia or in Bali. So we're going to have a good time. We're going to watch I'm going to clean the chart out, and we're going to break it down together. Okay, so we're on the Aussie dollar. As you can see, it's a busy chart. But what we're going to remember, we're going to clear everything out, but we're going to remember this 61.8 weekly and the 50% that we identified. So what we're going to do is clear everything, clean chart. We're going to remove everything, and we're going to go on the replay, 2:45 in the morning of London. So we traded this during the Asian time. Okay, so what did I see? Actually, my analysis wasn't from the day, it was from the previous day. So what we're going to break down is we're going to go straight on to what we were looking at, and that was the weekly. Okay, so we jump on the weekly, and if we make this small, we can see we have a very big drive. Let's look at the price action. What can you see here? We can see some fair value gaps being filled. If you remember, we were seeing this getting lower and lower and lower. It didn't break the highs and it came lower. Now, this move was the big move which retraced below. This is the 50% area, you can tell. Thus, this is more than the 50%. And then the second move, which is happening now and has created this double top, is this move here. So it makes sense if you're day trading to go to the closest fib, which was this move here. We're going to use the magnet to get the bottom of this and the top of that. And as we're going to see, the price retraced nicely into the 50% and stalled exactly to the pip, to the 61.8. So what we're going to do is I like putting this line here. I'm going to take the magnet out so we have the freedom to go exactly to the spot. We're going to call that the 61.8 on a weekly, that blue line there. And then we had another one, which was the 50. So these are the two mainly weekly levels that I was interested. And you might be asking, ICT doesn't talk about this. Yes, this is sort of like a general understanding of Fibonacci retracement. You can use all your knowledge that you have around ICT and how you know, your previous knowledge, and then you can use ICT in ways that makes your trading better. I use it for entries. I use it to my daily bias, create my previous daily bias, my high, lows, equilibrium, all that comes from ICT. My management comes from a bit of a scruffy trader's methodology around, he calls it madness, and I've taken parts of that and made it my own and what works for me, and we've come up to the solution of repositioning, which I really like. So this is a combination of all that. So we've got our lines in, then we're going to drop down to the daily. Okay, so we're on the daily. As you know, what we're going to do is on Wednesday, we're trading the Wednesday day, so we need the previous daily high, which is this one here, the wick of that candle, and we're going to change that to previous daily high, and then another one where we're going to change to previous daily low. What is this telling you straight away on the daily? You should be quite familiar with this now, and it should be very obvious where the price is and what we should be looking for. And we also got the equilibrium, that is the 50% of that Fibonacci retracement. You can use any method to get a 50% line. I just like using that because I'm familiar with it, and then I call that equilibrium. All right, so what do we have? We have premium above this black line here. We have the 50 retracement from the weekly level, which was interesting, and then we have the 61, which was very interesting. Now, what also do we have on the left side? We had that big drive, which is the 61, but also we have is this fair value gap here that hasn't been filled on the daily level. So we're going to bring it onto the side here so we can zoom in, and we're going to go on a magnet and put that on, touch that one, and extend it across. Well, what do we know? This is a lot of confluence of areas of interest. We have a daily fair value gap. Daily fair value gaps get respected really, really well. We have the 61.8 retracement of the weekly chart. We also have the price. I'll let you enough time to think about it, but where is the price now? It's broken the previous daily low, a heavily discounted area. It's broken the lows of this swing low here. So there's inevitability that maybe if not here, across the whole fair value gap, there's going to be a reaction. Now, because we've got the 61.8, and I like buying the 61.8 of a retracement, as soon as I saw that, I didn't need to see a lot. I wasn't, when I opened the chart and I saw it touching the 61.8, I wanted to be involved. And sometimes you've done your daily analysis, it comes from the weekly, it comes from the monthly, and you're waiting for something to happen, and it's happened. Get in. This is why you do the analysis. And if anything, for you to wait for confirmation would give you a worse price than where you are now. Yes, it's gonna maybe potentially, it won't give you the fair value gap and you're wrong and it will go against you, but you have so many areas that you're interested in trading this. So why not get involved? Right, so this is what we saw. We had our daily high, it broke below the equilibrium. This is the Asian session now. This is 2 a.m. in the UK, and we're gonna see what happened. So we're going to go one down, and we're going to see at what level did I get in. Let's bring back up the MT5. We've got 655753 55. That's close enough. That will do us. So we're going to put that best entry. I'm only going to put this entry just to not keep all the trades in, but you can see 761 and 753. So those are the two areas, very, very close to each other. So what we had, let's see if we could find a fair value gap that would give us the entry that we were looking for. Why? Because we were jumping off, it did actually. We were jumping off the 61.8. We broke previous, what sits above here, buy side liquidity. What sits above here as well, as we can see now, is created another buy side liquidity. Okay, what we've got here, fair value gap. Now you see how things fit in. Right, so we're not interested in the downside, we're looking for a long position. So what we want to see is the price to break, take liquidity from this area, not to break lower, or if anything, break into these fair value gaps and then go higher. Now, it didn't give us that clean fair value gap on the 1 minute. Okay, so that would be, if your ICT, to be exact with ICT, that would have to retrace back in here and then go higher. However, what it did give us was this fair value gap here. This would have been your perfect entry. I'm not sure if I didn't see this, or I saw it a bit late, or it was slippage. I can't remember exactly, but might have been slippage actually, because this is only 1 pip. So I got in at the perfect fair value gap, which makes me look amazing. I love it. So that's the slippage. Unfortunately, I couldn't get zero slippage on this. And here we are. So we're going to label that. I think we've done it already. Best entry. It's too far on the right, so you can't see it. And then what we did is we were looking. We had that twice, so we were looking for 10 pips. Now, it gave us that up to, that's 5 pips. Let's see how long it took for us to make that. So we're coming back up, and the price came back up, and it broke the highs, came back down to fill what? Fair value gaps on this. So if you hadn't filled here, this is your area to fill in. And let's see how many fair value gaps opportunities you had to get into this trade. Can you spot them? One there, from that wick to that bottom. Nothing here. One there, from that wick to that wick. So you could have your first position here, second position here. Going where? Where's your next target? Biggest target would be your equilibrium. So there we go. And it broke higher and smashed out of the picture all the way to this previous high here. So my profit taking from those two positions was this high here. As soon as it went to this high, I took out my positions, and a little bit higher, I think, because we made pretty much 200 and odd dollars. So that was the first part in the Asian market. So I was going into London with a bit of profit, and it was great. So let's turn on the lights because it's getting dark. I'm going to be a bit yellow now. So there we go. That is the first part of the trade. Very, very clean. And it shows that if you go back on your higher time frames and you analyze them in detail, look at the daily, look at the weekly, look at the monthly. ICT talks about this in the 2022 mentorship. Make sure that you break down every single fair value gap that you can see that is obvious, but use other tools like the fib. If you don't use the fib like me, like in retracements, you can do it like standard deviations that Michael does in the ICT 2022. It will give you how many standard deviations the market has moved and potentially can move. If this doesn't make any sense, it's probably because you haven't gone through the mentorship, and that is something that I would definitely recommend. Go and watch the 42, 44, I can't remember how many they are, videos on YouTube from ICT. It changed my life, changed my way of trading. Also, combination with the Scruffy Trader, which also gives you a very good fundamental knowledge around trading key levels and so on. And I've created what works for me. Does this work for you? Potentially. I'm getting some messages that a lot of people are seeing success by watching my videos, and that makes me really happy. So we haven't finished yet. We're going into our London kill zone, which was our main trade of the day. Technically, we wouldn't have taken this trade on the on the Aussie dollar. We only took it because we had analyzed it previously, and it was so clear. It was obvious. It was there. It was in your face. Free money in a way. You've done your analysis, you've done your hard work. That's what pays it off. So let's jump back onto our trading view, and now we're going to switch gears and go onto our pound dollar. Pound dollar, we're going to clear everything, and I'm doing this for you guys. This is quite painful because I have to redo this every day. I guess it's a good practice to get, daily, getting your buy list daily in case you've missed something. By doing it again, you see things that you haven't seen in the previous day. So what we're going to do is jump onto the same time, but this is going to be the London kill zone. And you know how I find the London kill zones? With these boxes here, which is from indicators into FX market sessions, and that will give me this. Obviously, I've changed all these to match the New York Times and the London kill, New York kill zone, and Tokyo kill zone. So I have all the kill zones there that I am interested in, and we're going to go back to Wednesday London session. It was a great session. Okay, so we're on a clean chart. Let's jump onto the daily, and let's quickly have a look at what the pound dollar has been doing. Without even seeing the chart, I remember what's happened on the pound dollar, and you should too. Remember, we were on the double top. We had taken liquidity from the left side on the daily, and we had created a double top, and we were saying that the pressure for the pound dollar is down. So why did I buy? Now you see, there it is. You've got it exactly what we described. We've got it here. Took liquidity, buy side liquidity from these highs, came down, came back up, created a double top, and now pressure is down. And where that down is going to be going is to retracements of this. We can quickly add another fib on here on the daily and see where would that retracement be sitting. We're currently sitting on that 61, close to that 61.8. And that's something that you can add to your trading. It's just a quick scan of obvious Fibonacci levels that you can introduce into your trading. And then we can put that in there, put the other 61 on a daily. This one is 61.8 daily. Okay, so there we have it. That is quite crucial. Also the 50 above it, and we can add that. Okay, there we have it. We have our two lines. Okay, we don't have to make it complicated. This is the arena that we're playing in. So why, someone will say, why are you taking that fib and you're not taking this fib or even this fib, the actual low? You can. And that will give you a little bit of a different story. They're still both valid fibs. Why am I taking this? If you work your way up, you can see that that fib has retraced to 50%. That move here has definitely retraced to the 50%. So up to this point, everything has been completed. Okay, so we're talking about this fib here. It's come back to the 76 and all the way up. Now, if I'm interested in the now, I want to see a move that hasn't been completed. And that move starts from this candle here, that green candle. It's gone all the way up, came back, failed to hit the 50%, came up, created the double top that we've been talking about, and now it's pushing down into that 50 level. What do we like to do on the 50 and the... actually, I've taken it off this. Let's see if I was correct. So that 50 retraced the 50, and that's why I moved it up and went on to that candle. So this is the actual move that hasn't retraced yet. It has retraced to that 50, but not to the 61. And this is the action that we're seeing currently. This is if you want the now current play arena on the pound dollar. So we're in the golden zone of that fib retracement. Okay, so that's something to bear in mind as we're going in. So let's put in our entries. Our best entry on this was 18218. So we've added our two positions in, and what we're going to do, as always, we're going to go and put our previous daily high and previous daily low. So we're going to jump onto this. We're going to add our magnet. That repetition is what's going to make you consistent. This repetition is also going to make you understand the price better, understand what you're looking at and what you're doing. Just going to go a bit closer so we can see that wick. The drawings are in the way. So there it is. So we're going to add another level at this, which is Tuesday, the day before Wednesday, the previous low. And as always, we're going to close this. And as always, we're going to add the 50%. Let's try a new way to put the 50%. We can drag this from the top there to that line there. And that's going to be the 50% line. And you can have a horizontal line exactly in the middle. And that's going to be your equilibrium. So there we go. We are all set. Again, what do we see? Without much analysis, what do we see? Quickly, we saw that we've retraced into the 50%. We're trading below the previous daily low. In an ideal world, like we saw on the Aussie dollar, we would want to be around that 61.8% because we know it's going to be a reversal time for that. But we are in an extremely discounted area and we are looking for longs, even though our bigger picture is that the price is coming down. Okay? Because what we're interested in, what the price will do is going to go up, either do a Judas move, go in one direction, then it's going to go the other direction with the distribution. If not, it's going to be a trending day, which will go one direction, but it rarely happens. So there's opportunities to buy and short the pound dollar. So as long as you can justify your position and why you got in and where you got in and how you managed to get your profits, then that's all good. Now, there are occasions where I will look at the market and actually change my bias, seeing the same thing. For instance, now, potentially, even though we're at a discounted area, I could potentially wait for the price to come back up towards equilibrium and this 50% daily to short it down to the 61%. That sounds like a really good plan. I didn't have that plan. My plan was to long this up into the 50% daily and equilibrium. It doesn't matter what you do as long as you have a plan, because both this and this will give you opportunities to get paid for the day. So I'm saying that because a lot of people get stuck up upon, I can't get bias, I can't find my bias. Yes, you do have to have an understanding of what the price is doing and where it's at, but it doesn't necessarily matter. You can get your bias wrong and still get paid. Like we say, if your bias is right, it just forgives a bit of a bad entry. If your bias is wrong, then you have to be quite frugal with your positioning and your targets. And you know that because the market will be going against you. Okay, so let's go now down from the daily. Let's go back into the hour and let's see what's on our left of the chart. Not a lot. So we're going to go one time frame up into the 4 hour. So what can we see here? We see that the 4 hour came back to that 50% and created that swing low. What's below this swing low? It's sell side liquidity, which the market has now taken out. And what does sell side liquidity? It's a fancy way of saying that people will have sell stops. Sell stops around these areas. Why? To take profit from the big move that we have on the daily. Let's look at the daily quickly. This is the move that everyone's been playing at. And it's come down, potentially taken out stops from this here, this sell side liquidity here. Or let's call it stop hunting. So people that were trailing the stops here have been taken out. People that have been trailing the stops here have now taken out. What happens, like in this occasion here and in this occasion here, you're anticipating a reaction because there's a reason that the price went down to that liquidity level. Also, what we had here was a fair value gap that got filled. Okay, the next fair value gap that is obvious is down here. And here we're on a daily. So there we have it. That is a nice picture where you can break down what is happening currently with the pound dollar. So what have we got here? We've got a huge move down. How many pips was this? That daily candle went pretty much in one direction. And that is 238 pips, 2%. That's a huge drop. So what we're anticipating is a reaction from that. Obviously, you can see all these prices. Maybe this area here, you can argue that didn't have a huge reaction. That move there, 378 pips. Had that reaction there, but not a huge reaction. But generally, if you look at big candles, they all come back and retraced. And that's what we're anticipating. Obviously, if we're wrong, like here, in the 10% that this happens and it doesn't retrace to 50%, you're going to be stopped out, and that's okay. You're going to take a loss. But luckily, it wasn't today. So what we're going to do is go down into the 15-minute, which is our trading time. So we've mapped up our chart. If we zoom down like this, you're going to see we have our previous daily high. We normally have our previous daily high red. Let's change that. And we're at the bottom of this area. So we're expecting a bit of a bounce to the upper side. Now, because we got paid in the Aussie dollar, we're not looking for a lot of pips. We're looking for 20 pips. Okay, so someone might say that's a lot. I normally do about 50 pips. 40 to 50 pips in a day. So that is way below my average of, so technically it should be an easier target. So what did we see? So we're going to see, they're going to drop into the candles. And let's go even lower so I can show you what I saw in terms of entry into this. So we're in discounted area. We've broken the previous low. We're now going into our London kill zone. We have the pre-market at 7 o'clock and the open at 8 o'clock. And I am ready. I am looking for setups. Is this a setup? We've got this liquidity here. This is where it can be a bit subjective, okay? So we've got buy side liquidity here that got taken out and is pushing down. Look where we are. This was a clear break at 6 a.m. if we had seen it. And it came back and retraced and filled all the fair value gaps and now pushed higher. Now, I would say this is creating sort of a bad double top, but because you're convinced that this is going long, you can take this fair value gap in here because you're looking for an opportunity to get in. If you're risk averse, you wait for a bigger break because then you don't have to sit into this heat. So it's gone back down into target that previous daily low. So I got in, let's have a look at the time, 7:40. So we're coming up. Again, we're in discounted area and this was my entry. 7:32, 7:40. I was waiting for a retracement of this move and off I went. This is the line. As you can see it, I did put it a bit far out, but if I hover over it, you can see there, that is my best entry there, and that's my worst entry here. So we had a push up above this liquidity here. We had the reaction into this fair value gap. The fair value gap is from that wick to that wick. And you had all that wick there that you can get really nice entries. And from that entry, where we're targeting, what is our target? So my target, like we said, it was 20 pips. Obviously, because I've got two positions, it's 10 pips each. So that's my worst position. I wanted it to go just to there. And that would be taking out these previously highs. Let's see how quickly it did that. Came back down. People get scared when they see these, but when you've traded ICT, you know that these are repositioning. They're just coming back out to take out stops, take out people that trade with tight stops, also to give another opportunity to get in. Oh, if you're here and you missed it and you're like, I wish I had that price. Now it's giving it to you again. And I got in, I believe around here and found 740 in the pre-market, and then price comes around there, hovers around the previous daily high. We have to sit in a bit of heat and boom, we got targeted there and we are out. Now if we see the price as it's playing out, it did go higher. We could have taken from this position here all the way to there 20 pips, so that would have been sort of $400 per position, a lot of money, $800. But I was paid half a grand in a day. That's more than I require in my day. And if we jump onto our performance, we are looking at March and we're doing $2,800 with 6 days of work. Now, if I think of my previous job, I would have to do a lot more to get that money. And we're doing it at a very small average. I think that's a lot better. 32 on a full week, 57, that's a full week, 26, that's a good week. But obviously we had that $15 there. So I wouldn't count that as a trading day. So you can see that is a very low week. I'm liking it, and we've got one more day. We've got NFP. We'll see how it is tomorrow. I'm going to trade it up to NFP and hopefully not needing to be in the NFP results just because the volatility is too high. So this is TradeSync. If you don't know what it is, it's basically a journal for rich people because you can have a journal in Excel. You don't need this. But if you have a bit of money and you want to spend it on nice graphics and it gives you a lot of reports, you can have your overviews, you can have your weekdays, you can have your entry prices, you can analyze it and you can put your setups in, your mistakes. It gives you I can go in any of these days. You can go on the top here and you can filter by any date. So let's do today. and apply the dates, and that will give you all the information that you how you traded today. And what I like about this is you actually can go in individual trades. So I clicked on that on the 154. I don't know any other journal that does this. At the bottom, obviously, you can add your a picture of your chart, but it will actually give you a trade chart of your trade, of your entry. And I've changed this to be white. And it will give me, obviously this is in the past, so it will give me the level of where I got in and the execution of where I got out, and you can annotate this and draw it. You've got basically trading view into your journal, and this will give you obviously all the information about the trade and so on. So I really like it. I don't use it as much as I should. I mainly look, and it's got an evaluator. They will evaluate your trades, and you can do predictions on your performance. Also, if you're trading stocks, it does market replay, so you can replay your trades. But I do like this calendar because it keeps it all tidy and nice, and I've got my filter there, so if I take it out, we're going to see all the greens. We're still in greens. We're really enjoying the green color. So if you're new here, we've had a 10.8k in January, 7k in February, and now we're at nearly 3k in March. So hopefully going to continue this trend, which is an uptrend, and we like uptrends. So there you have it. We've had a lot today. We've broken down an Aussie dollar trade, which was in the morning session of the Asian session. We had a pound dollar trade in the afternoon. I showed you my entry. I showed you my bias, how I created bias. We looked at some tips on how to use the Fibonacci. We also looked at TradeSync, which I have a link below in the description for 40% discount. Make sure you go and click on that if you want to. It also supports me. It gives me a bit of I think it's peanuts, like compared to what we're making in a day in trading, but why not? It promotes the channel and the nappies. That being said, today we had a good trade, but tomorrow is going to be an interesting video because I did trade the US 30. And I'll save it for tomorrow, but let's say it's a very expensive market, and I got caught in terms of I couldn't have any more positions on, so I couldn't do my repositioning. I couldn't manage my trade correctly. But that's for tomorrow. Make sure you tune in on that. And there's going to be 2 more videos, one tomorrow for Thursday, and Friday is going to be over the weekend or next Monday. We'll see how we do. I hope you've enjoyed it, and make sure you like and subscribe and follow me on Instagram, because that's where I literally post my daily activity. You can connect a little bit with me without, not from more live if you want, on the stories, and I show you a little bit about Bali, where we are, how we got here, a bit of motivation. I post some reels on there. Make sure you go and follow, and if you want more extra content than you're getting on these pretty much daily videos. If not, I'll see you tomorrow. Have a good afternoon or morning wherever you are in the world, and I'll catch you later.
I can't take no loss. I don't even know what it